Right. So next one, PQR Limited is one of the leading companies in the cement manufacturing industry. Right from its incorporation, it has been a subsidiary of GDP Limited. The total sharing holding of GDP Limited includes the following. Government of Puducherry, Government of Delhi, each holds the 19% of the paid up share capital. Government of Gujarat share is 13.5%. Right. So this particular company at PQR Limited, it's a subsidiary of the GDP Limited, and this is the shareholding of GDP Limited. Okay. On 27th August 31, JJ, the auditor of PQR, had resigned from his post citing the personal reasons. He had forgot to inform about his resignation to the authorities. The casual vacancy which was created by the outgoing auditor was filled up with the appointment of FBI and company as statutory auditors of PQR Limited. However, few shareholders of the company raised certain objections which was later settled without any problem. As a part of the terms and conditions of the appointment of the auditor, FDI and company agreed to the following. Charge fees at 5% of the paid up capital plus 0.1% of the net profit of the company. However, JJ had agreed to charge only 45,000, select and recruit personnel, conduct training program on behalf of PQR. As far as FDI and company CAs are concerned, F, who is one of the partner of the firm, F does not sign the financial statements, had borrowed a sum of 3.89 lakh from GDP. He had also purchased goods worth 1.09 lakh from the company in the ordinary course of business at the arm's length price. Both the sum borrowed and the cost of goods bought are not yet paid by F. Yet another partner of the firm, Mr. I, who is also responsible for signing the financial statements of PQR, was also engaged in the teaching profession during his free time, approximately 2 to 3 hours daily. Upon hearing about the efficient services provided by FDI and company, the CAs, they were approached by XYZ Cooperative Society to act as their statutory auditor for the upcoming financial years. The firm agreed to the offer and had the following options in mind with respect to the fees to be charged from them. Right, to charge fees as percentage of net profit or to charge the fee of rupees 101 based on the above facts, answer the following. Right, so it's like a truly integrated case study over there, wherein one they have talked about the resignation of the company auditor, then they are talking about the ethics, that what other services are being provided by the auditor, then they are also talking about the indebtedness, that what is the amount of the indebtedness of the auditor, then again regarding the ethics, whether CA is also doing the teaching activities, and then again in the ethics regarding the charging of the fees. Like in case of cooperative society, can you charge the fees percentage of net profit? Yes. So that comes under 10.11, clause 10, part 1 of the first schedule. Right. So to whom should have JJ informed about his resignation? What could be the possible consequence for his non-compliance? Right. So he should have informed the registrar and the PQR. He should have informed the ROC only. He should have informed the ROC and the FBI company. He should have informed the registrar and the C&AG. As a consequence of his failure, he is liable to a fine of 45,000. Okay. Right. So now let us see, when do you need to inform the CNAG if it's a government company. Right. So let us see whether this particular PQR is fitting into the definition of the government company. Right. So government of Puducherry, government of Delhi, each holds 19%. Right. So 38% of the paid up share capital, and Gujarat is 13.5. Right. So 38 plus 13, that is exceeding the 51% or 51%. Right. So that is why GDP is a government company and PQR is a subsidiary of a government company. So even that comes under the definition of government company. And if you resign as an auditor of a government company within 30 days from the date of resignation, the auditor has to file the form ADP3 with the company, the ROC, and also with the C&AG. Right, and if he does not file it, then again he is liable for the penalty, right, which it says it should not be higher than the fees of the auditor. And somewhere in the question they've also given the charge only 45,000 over there. Right, so what does it say? 45,000, right? So he should inform the C&AG. So one, we are very happy with only one option there, which involves the C&AG. And as a consequence, he will liable to a fine of 45,000. Generally, it is 50,000, but or the auditor's remuneration, whichever is less. So here the remuneration of the auditor is less. With respect to the acts carried out by F, the partner of the firm, right? So D is the correct option for this one. Okay. Right. With respect to the acts carried out by Mr. F, the partner of the firm, what can you infer about the appointment of FDI and company as the auditor? It is valid since the indebtedness is within the prescribed limit. It is not valid since the indebtedness exceeds the limit of 1 lakh. Oh my God. The limit of indebtedness is 5 lakhs, not 1 lakh. Okay. It is valid since F is not signing the financials. No, no partner of the firm can be indebted. It is valid since the indebtedness is not with PQR. No. So what will be the correct option? But we have to check that it is not exceeding the 5 lakh, right? So 3.89 plus the 1.09, right? So what does it say? 18, 9, and then after that the 4, right? So 4.98. So just marginally safe. So it is not exceeding the prescribed limit. It is within the prescribed limit. So A will be the option. Right. Which among the following, as per the Chartered Accountants Act, charge fee at 5% of the paid up capital plus 0.1% of the net profit of the company? No. For cooperative society, it is allowed. But generally for a company, can you charge contingent basis? No. With select, recruit personnel, conduct training program for and on behalf of the client? Yes, that is allowed under section 224, included under the list of the management consultancy and other services. Then, one of the partners who is responsible for signing the financial statements of PQR, was also into the teaching profession during his free time. But again, that is allowed, but for that you need to take the specific and prior permission of the ICAI. But as such, is it permitted? Yes, it is permitted, right? So you have 1, 2, and then after that the 3, right? So 1 is not allowed, but 2 and 3, is it allowed? Is it permitted? Yes. And the last one, with respect to the fees to be charged for the new assignment, which option can be opted by FDI and company to this? Now, what is the company, or what is the organization for which they are to be appointed as an auditor? The cooperative society, right? So cooperative society, can you charge fees based on percentage of profit or just 101 rupees? Because the minimum fees, that is only recommended by ICAI. It is not mandatory, right? So that is why either 1 or 2, right? That is why either 1 or 2. Okay, so that is why C is